Here's what you need to know going into Nvidia earnings and exactly what folks are going to be looking for. Keep in mind, I will be live streaming the Nvidia earnings, probably also do the earnings call. That will be over at the Meet Kevin Market Live channel. So if you haven't checked out that channel yet, head on over there, Meet Kevin Market Live channel. Go check that out. Okay, so for now, what we've got to do is Nvidia. Look at the numbers here. Okay, this is Nvidia. These are expectations. So first of all, last year we had revenue of $60.9 billion. A lot of money. This company prints money. It's not really worth going into much of a balance sheet risk concern here or a margin concern. This company makes a lot of money. They have one of the most glorious profit margins ever because mostly they design chips. They don't actually make them. I mean, just divide 44.3 divided by 60.9, you're at a 72.7% margin. And the company is suggesting that margin could actually run as high as the mid 70% range, which is phenomenal. At some point, though, there will be price compression. And what I'm going to be looking for in today's earnings report is that price compression under one specific line of the balance sheet. I'm going to be looking at inventories. I'm not so worried about payables or bills because they've got cash like crazy. It's unclear to me, though, that Blackwell is actually going to show up in inventory yet, given that it looks like Blackwell might be more likely to be delayed than already ready to start moving to customers earlier. At least that's based on a report from Barron's a few weeks ago. Who knows, maybe that information is old now, but my understanding is UBS, via Barron's, believes that Blackwell will actually get delayed from October to December before it's ready for shipments. And any kind of delays are just sort of going to push back when we might recognize that revenue for Nvidia. Q4 is usually a really big quarter for these chip companies. So what you're going to want to look for is, in addition to the balance sheet adjustment we'll touch on in a moment, you're going to want to look at that fiscal year growth. They have really high expectations. Last year was $60.9 billion. The expectations for this fiscal year, folks, $112 billion. That's crazy. That's not the EPS number there. That's $112 billion is what's being expected. That's high. That's a really, really big ask. So just be careful. The expectations are high here. Now, the expected volatility actually is not that high. This, I think, is very interesting. We're only expecting the stock to move today 7.75% versus the usual 8.5%. So if you're playing straddles, like basically options betting here, you need, if you're buying those options, you really need volatility to move the stock more than 7.75%. And if you're playing sold options, you want the stock to move less than 7.75%. Obviously anything can happen with earnings. Generally, a rule of thumb when I trade is I don't like to play earnings because it's either going to be up or it's going to be down. And so to me, those catalyst moments are a little rough because you make a lot or you lose a lot. And I kind of rather play the lines on trading. We did a little bit of line playing on trading today. In the stocks and psych group. Remember, this is no guarantee that you could get these kind of P&Ls or returns. This is just sort of like, I just send an alert. If I see a trend that's going on, I try to play it. If I can make money, great. This is my P&L so far today. I do have another trade open, so it could go the other way. Right now, that trade is profitable as well, but it could go negative really fast. But anyway, my P&L so far today is 60 on Enphase, and that was betting about 30 to 50 at a time. So doing decently on that one right now. Hopefully we can keep that up, but no guarantees. Obviously, check out the Stocks and Psych group. We got a coupon expiring on the 31st. If you have any questions, email us at saf@meetkevin.com. And always remember, past performance is not a guarantee of future results. Okay, so back to the actual balance sheet, and this is where I have a little bit of a concern. So if I jump to the balance sheet on Nvidia, I'm going to be right here. And the concern I have is inventory. What happens if we actually get a move down in inventory here? See, inventory only moved up over the year from 5.1 billion to 5.2 billion. And I have a little bit of a concern that H100 pricing has started to move down. I did a little bit of searching on this. Tom's Hardware on 2/2/24, that's when my triplets were born. Summer's doing well, by the way, thanks for asking. H100 chips, according to Tom's Hardware, were going for between $30,000 to $40,000 and even more at eBay, they said. If I go to ASA Computers or even eBay, I can definitely find listings for $28K. Now, I'm not sure if those are exactly the same model, so I could be wrong. I'm not like perfect at analyzing all these different types of 80 gigabyte graphic card chips. And some of the different varieties of these. But here, for example, you could see ASA Computers will sell you this H100 for what used to be a market price of $44,000, now for $28,000. Now, I don't know if it was ever actually selling for $44,000. I expect it was. And I can't hit add to cart. I can only get a quote and talk to their sales reps here. So it's hard to see what kind of inventory they actually have availability. This does create some visibility concern, right? With a lack of visibility, there's risk, and I generally don't like risk. Now, I know that sounds crazy when I'm trading options, but the reality is I try to take profits early and I try to take losses early because I'm a little baby and I paper hand things too early sometimes, but that's okay. So anyway, for Nvidia, how do I personally want to play this? Look, if it dips, depending on what the outlook is, I might consider increasing exposure a little bit. I don't really love the pricing where it is now. I'm honestly tempted to like take like a tiny sliver off the table, but I haven't committed to doing that yet. I've pretty much only committed to just not trading this. Like I don't want to go in and say, okay, I'm gonna sell puts and calls or buy puts and calls. I really, whatever happens, happens. I will cover it live, but it's way too much of a gamble for me. Anything could happen here. And part of the problem is you had a little bit of this red flag from Amazon. Now, Amazon's red flag, some people tried to water this down a little bit. An Amazon spokesperson tried to water it down. They're basically like, hey, Financial Times did a piece and said Amazon's canceling their H100 orders and they're going for the Blackwell orders. Amazon then has a spokesperson come out and say, hey, we're not canceling orders. What are you talking about? No, we're doing great. We just want the new stuff. And so I had this explanation on the Market Live channel this morning where I said, look, here's the reality of how you have to look at this. And I'll give you the quick scoop on this. When AWS at the start of the revolution of AI says we're going to go from 100 AI servers to, let's say, 1,000 servers, then what you really have to do is say, okay, got it. So you're going to increase your server capacity substantially. And then not only are you going to increase that capacity, you want to keep it growing, okay? You basically ramp and you're willing to buy the H100s at a premium. The reason you're willing to buy the H100s at a premium is because you're able to make money bigly on it, right? That's why you're willing to pay for it. Hold on one second here. Out on that candlestick boom. Out at 1:30. I just had to send a quick alert. I just had a limit hit. That, I went into that for, what was that trade? That trade went in, let's go! That trade went in at $1 on 500 contracts. And I just pumped the P&L with that trade. Again, this is no guarantee that everybody who follows, and I don't recommend people follow trades, can do the same thing. Remember, I'm also trading with a large account, but that trade, I had 500 contracts in at 101. 101, 500 contracts, so it cost me 50,500, and I sold at 130 was my average out, so 65. So that's $14,500 or so there while filming. Let's go. I might re-enter that. Might re-enter watching. I think the trend will be down. Okay. Okay, so back to, sorry, that was very distracting. It's totally my fault. But anyway, it's really important to remember this right here, that when they're ramping, people are going to buy these chips for a bigger price. People are going to be willing to pay because of the money they can make with these servers is greater than the cost of acquiring these chips. Now, the problem is, if they say, hey, this year in 2024, we're gonna go from, let's say, I'm making these numbers up, 1,000 servers to 1,000 servers. In other words, we're not going to grow. We're just gonna wait for Blackwell. It kind of implies that you're no longer increasing, that AI expansion and growth is slowing. And there are two potential explanations for that. Either Amazon sucks, or AI demand is slowing and the bubble is popping. Now, because I don't want to offend Nvidia people, I want to make it clear that let's just make an extreme example here, and let's say that there's a 99% chance that AWS just sucks, and a 1% chance that the AI bubble is starting to turn. There is still a non-zero chance that the AI bubble is starting to turn. Again, I'm not here to be bearish on Nvidia. Like, I have a good chunk of my personal portfolio that's exposed to equities. A good chunk of it is exposed to Nvidia. So this sucker goes down, I'm losing money. If this sucker goes up, I'm making money. Like, I want to be clear on that. I'm not having trades going into it. If it goes up, I make money. So I want it to go up. Like, I want it to go up. I really do. But somebody else commented, they said, well, this isn't bad for Nvidia because $100 of the Grace Hopper revenue will just end up going to the Blackwell chip. This is true, but you have to remember something. That's delayed revenue, and it means the existing Grace Hoppers may lose value. And so that could be a red flag of waning server demand. So I just be careful that I don't know that I could speculate that this thing is going to go to $1,100 like some people are speculating. But I also can't long-term bet against Nvidia because even when these prices normalize, which they will, the company's still going to probably print money with its profit margins. And the profit margins I really like. Look at, for example, Vertiv, just as a comparison. So if I go to ehack.com, I go to Vertiv. You look at Vertiv Manufacturing. Their stock has outperformed Nvidia's. But the problem with them is they're only growing at 10%. Nvidia's forecasting basically a double. And their gross profits are really only growing because they're able to raise prices, but in their earnings call, they're not actually that enthusiastic about being able to raise prices. In fact, I looked at their earnings call last night, and I put a couple, did I put a screenshot up of it? No, I didn't. It's right here. Okay, PDF expert. So if I go into the Vertiv earnings call, here it is. And okay, here it's not. Okay, I don't know where I put it. Let me see if I can find it here. But the point is, the Vertiv earnings call kind of suggested that, hey, we don't really want to get into what we're going to do with pricing. We're not entirely confident of exactly what's going to happen with pricing. Oh, I got it. I highlighted it a few places. And so you kind of make what you want of this, right? We anticipate orders will remain strong, but I want to caution, 60% order growth is not the new expectation. There are reasons specific to Q1 that support a very high level of order growth, including comps compared to last year. And, don't be surprised to see orders go down in Q2. They literally say that. And so this is a company that supplies cooling equipment, liquid cooling equipment to chip designers like Nvidia. So they supply liquid cooling to Nvidia and expect to participate, mind you, in the Blackwell. So a lot of people are like, oh yeah, Vertiv is the next play on Blackwell. I don't know, man. I know the stocks outperform, but it just screams a little bubbly to me because people are forecasting that their bottom line is going to grow 25% a year for the next 4 years. With 10% margins, bottom line margins at 10%, 10 to 13%, I don't think so. But again, maybe I'll be wrong. Because if they do grow 25%, they're only at a 1.67 peg. And that's Vertiv. VRT, I think, is their ticker. But otherwise, I feel like the reason it's going up is because it's been going up. It's my take. Anyway, make sure to join me on the Market Live stream. And remember, if you do decide to join the Stocks and Psychology Money Group or any of the other courses, they're designed for education. My screenshots of my P&L are not a guarantee that you'll be able to pull off the same thing. Don't copy the trades. The idea is to teach you where the lines are, to teach you how to find trends, and then I point them out when I see them, and I really try my best to just be transparent. Yes, obviously, knock on wood, right now we're doing well. That wasn't the case. There was a period of time this year where I was negative. So that could totally happen again. But I'm really happy with the last month. Again, not implying that it will continue to be that way. I'm just going to try to do my best. fair disclosure. But anyway, thank you so much for being here. I love you all. I really do. I really do care about everyone's success, and that's why I want to be as transparent as possible. Thanks so much for watching. We'll see you in the next one. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.